Hello and welcome back everybody to this weekly update on the financial markets. I'm doing these sorts of videos every week since now a complete year. So I have the results ready and I compare it to an investment into an S&P 500 index via ETF at the end of the video. So stay tuned. But before that, I will like always go through the S&P 500 index, US oil, gold, Bitcoin against US dollars and 4 single stocks here on the right side and analyze them with you via price action and explain why I'm in a trade and why not and when and how I want to trade these assets. So let's start directly in with the S&P 500 index on a weekly time frame. Yeah, on a weekly time frame, S&P 500 index, what can we see? We can see we have an intact uptrend which is printing higher highs and higher lows after each other at the moment at a new all-time high level. Seems pretty excellent to me. We are currently retesting from below a recently broken uptrend line, now from the downside, and that often occurs to be resistance for price. Also, MACD seems like it's declining slowly, so a cross could be in front of the door the next couple of weeks, but we will see. Let's drop one time frame lower to the daily time frame. You can see I had a pretty hard time drawing in this vaguely white solid uptrend line here because there's not really a trend. There is a trend that's called uptrend, but it's hard to connect here some dots with an uptrend line. But I did my best, like you can see. We had the first bounce and the second bounce now. I was expecting that that was the high of the movement and that would be the first sell-off, and that some sell-offs are following each other into a smaller decline before then continuing to the longer term uptrend. But now we have seen a new all-time high, a slightly new all-time high, but that could now be finally the blow-off move before continuing lower, making probably an A, B, C correction, and then from there on recover and rise higher like we are used to at the moment. Yeah, that's my plan at least. I'm not willing to sidestep that one here, even if that's the top. My stop loss is way protected through a couple of support zones and 200 moving averages and Fibonacci retracement zones. My entry level is also below the last major all-time high, so I'm not pretty sure if we will see even a retest of this level if we see prices coming down, but for myself a little bit too risky to move now already my stop loss to my entry level to take the trade risk free. I will do that after we have seen a corrective move and then new all-time highs, or I have to see building here a good foundation from there on starting rising again. Then I will probably take my trade risk free with moving my stop loss to my entry level, and then I ride the prices higher to the first Fibonacci extension level, which would be around 6,900 points in the index, and slightly below that I placed my take profit. That would be a nice take risk reward ratio of 2:1. So pretty solid with 2% of my account balance at risk, or nearly $2,000. For sure, price can also decline and reverse completely, but at the moment, that's for myself not really a high probability, so I'm not trading after that. That's all I have for the S&P 500, but next is US oil. Oil at the weekly time frame, the highest time frame I'm analyzing here, we can see a red solid monthly downtrend line in combination with a monthly support and resistance zone. We have seen a nice breakout. Then if we zoom a little bit in, we can see the weekly consolidation here. Could be, you could argue that this is an A, B, C pattern. Maybe point C is already there, and the next move we will see is break above this weekly orange downward line in combination with the 200 moving average, which was in the past support for price and then turned resistance. So if we would get a nice move above that, that should be counted as a valid breakout to the upper side, and then I would get again a bullish for oil. At the moment I'm not so bullish. So here I mark that one with a question mark if that's already low, or we see even lower lows. If we drop one time from lower to the daily time frame, yeah, I thought we have here a broken daily downward line, surged higher, violated this weekly downward line, but it was only short-lived. Then we collapsed back lower and continued lower so far. So the moment pretty boring on my view. Even if we go one time frame lower to 4 time frame, it's probably staying right in this sideways range movement for some time. So at the moment, no trades for me. If you got a trading idea on US oil, let me know in the comments. I would be pretty happy about that. Next, gold. Gold on a weekly, absolutely parabolic move here after we have seen a break above this often tested resistance zone. We have only known one way, and that's up. Higher highs followed by higher lows on the weekly time frame, and right now a lot of sideways consolidation. MACD has crossed to the downside, but price is still holding pretty well. I have a trading setup, but nothing that will get probably triggered the next week. Let's drop one time from lower so you can see the more detail. We have intact daily uptrend. I think if we see a collapse in this sideways consolidation, then it's probably not lower than the 0.382 retracement level, measured from the low to the high of the last major movement in combination with a 200 daily moving average and this daily solid uptrend line. That would be a perfect support for re-entering if we see here a nice move and price action to the other side. But so far, price hasn't broken down. These last two lows have hold, and yeah, let's see if they hold still next time. If we are retesting that, at the moment it seems like we want to decline again lower, but if we see really a final move above the last highs here, marked with this red arrow, then I have a buy stop order ready to execute with the stop loss below the last major low. Risk reward ratio would be 2.5 at the moment, pretty conservative, below the second retracement level from Fibonacci tool. And yeah, I'll let that stand here till it gets triggered or not. What I'm not willing to do is trade this one short if we lose that low. That could well mean that we will reverse all the way back down to this level I marked you before, but the risk reward ratio wouldn't be that great, at least not the way I used to set up trading setups. That's all I have for gold. Next, Bitcoin, the digital gold. Bitcoin against US dollar on the weekly time frame. You can see that the uptrend on the weekly is still intact, printing higher highs and higher lows at the moment near a new all-time high level. The last major movement was measured here with the Fibonacci retracement tool from the low to the high of the movement, and we have seen a pretty sharp decline, and we ended on a 0.618 Fibonacci retracement level in combination with the last high here, so weekly support zone. From there on, we have seen a push to the upper side to new all-time highs and even tested the first extension level at $125,000 per coin. At the moment, it seems like we are retesting the 10-week moving average, but the MACD here, that's a big concern of myself, because it seems like it will cross next week to the downside. If we continue lower, that would mean that we have a divergence from MACD to price, so lower highs in the MACD indicator and higher highs in the price action. So that normally means that we are about to reverse, have a major reverse in front of us. Not guaranteed, but more likely if we see that reverse here. If we drop one time from lower to the daily time frame, you can see a white solid daily uptrend line, because we had a nice push in ABC correction, another nice push to new all-time highs, and a correction that stopped at this daily uptrend line, made a new all-time high, but only slightly, could be counted as a double top, then reversed and broke this daily white solid uptrend line to the downside. Not that bullish, to be honest. It's fitting to the weekly picture with the developing MACD divergence. That could mean that we are seeing now a reversion here, or a lot of sideways chop. I hope personally for sideways chop, like we have seen it back here, but without the drawdown afterwards, because my entry level and my stop loss level are slightly below this last ABC pattern and the last major all-time high, and of course the 200 moving average. So well protected, I would say. Not too risky, but yeah, if the reversion hard word goes further than this, then I probably get a problem, because this level here also could be the last hold for this overall uptrend of the last 4-year cycle. But if we would test that one, I would be out of my pretty nice leveraged trade, risking only $500 or 0.5% of my account balance for making $7,700 bonus, or 7.7%. That's pretty sweet. Risk reward ratio 4.3. I haven't explained that on the weekly time frame. Yeah, because we've seen all this reversion, I think if we see new all-time highs from here on, then we will probably test the second extension level of the Fibonacci retracement tool. And because of that, I moved my take profit from 135,000 a little bit higher to $143,000, so slightly below the second extension level. I think that's likely if we see a new all-time high afterwards. But first, we have to survive this pullback. I'm not sure how far it goes, but I'm not willing to move my stop loss lower again. I think it's pretty well protected through this price structure here. And it's even not guaranteed that if we see a push lower, that this uptrend will hold. Maybe that was the all-time high of this 4-year cycle. That would be worse. Not so good than expected, but we'll see. Still bullish overall, but cautious, I would say. That's all I have for Bitcoin. Let's switch to the single stocks here. Let's make it quick and short with single stocks. AOS or AO Smith Corporation on a weekly time frame, solid intact uptrend, and 3 similar situations after a massive sell-off, and then getting into a new weekly impulse to the upper side. I want to capture that one right here, and because of that, I compared the past 2 scenarios with each other to the actual one. And we can see that we every time have seen a downtrend, the first break supported by the 200 moving average, second new higher high correction, and then a break above that, and from there on rising prices. Second time downtrend line, first breakout, first correction, slightly higher high, second correction supported by the 200 moving average, breaking higher, nice trading setup to the upper side. Here downtrend, break to the upper side, first correction, second slightly higher high correction supported by the 200 moving average, breakout, and I am in a long trade. Stop loss below the second corrective move here, lowest point of it, and take profit at a moderate 2.4 risk reward ratio, staying still far below the last all-time high levels to not get in trouble with that resistance zone too much. From one time from lower to the 4 time frame, you can also see an head and shoulders pattern with the neckline here in blue with this resistance zone. We've seen a breakout above that. The support holded here, so resistance turned into support, and then we see rising prices. Not that steep already, but that can continue the next couple of days and weeks into my take profit, I hope, at least. So next, Netflix. Yeah, Netflix on a weekly time frame would have been a good investment, obviously. But we are not here for long-term investment decisions. No, we are here for trading. So let's from one time frame lower to the daily time frame. Yeah, what we can see here is a new all-time high, a pullback to the 0.382 Fibonacci retracement level measured from the low to the high of the last major movement. That's often a zone where we continue an intact uptrend from there on. Additionally, we have seen a cross in the MACD from getting a bullish cross to the upper side from red to green, also bullish. And yeah, if you zoom in on the 4-hour time frame, you can see that we have a 4-hour blue dotted downward line in combination with the 4-hour support and resistance zone. And yeah, we got to the level, bounced and declined lower. 200 moving average also here, and if I see a move above that high here, I will get into a long position with this 5-stop order. The stop loss would be placed below the last low, and my take profit would be 2-to-1 risk ratio higher. So yeah, at $1,480 per share. Pretty sporty, but it's trading, not investing, like I already said. Why I'm this setup, how I came on this idea, I backtested. Since 2016, I started my backtest and I had a couple of trades, and more trades have been positive than negative, and the risk reward ratio always have been greater than 2-to-1. So it's a good idea to trade this kind of scenarios. And yeah, we'll probably do next couple of weeks a video about this backtest or this kind of backtest and how I am approaching this backtest. So subscribe to the channel if you haven't yet. Yeah, that's my plan for the Netflix stock. Next, Investor AB. Investor AB intact uptrend on the green marks. You can see I'm already an investor in Investor RB, but that has nothing to do with this. Here the 200 moving average is still intact. We have a nice uptrend at the moment, consolidating here a little bit at the 0.382 Fibonacci retracement level on the weekly scale here. And it seems like we want to break higher right here. On the daily time frame, you can see the 200 moving average at the moment is resistance. So if we get above that, already happened today, then that's positive. Now I want to see a clean break above this two last major highs to get confirmed that we have a breakout here. That in combination with this daily resistance and support zone is a good trading setup in my view, with an overall long-term uptrend. My stop loss is placed below the last major low here on the daily time frame, and my take profit area would be a 2.1 risk reward ratio far away. And yeah, that's a solid trading setup in my view. Comment if you like your opinion on that one. But I will probably take the trade if we get to this level and my buy stop order gets activated. That's all I have for Investor AB. Last but not least, Tesla. Tesla on a weekly time frame, it's an uptrend. You better look at on the logarithmic scale, so you can see after sideways consolidation type of movement often comes a parabolic move to the upper side. We are still above the 200 moving average on a weekly, so at the moment it looks pretty bullish to me, even if we got a lot of news around that stock and his CEO, but technical analysts don't know any news, so or numbers or anything like that, only price counts here. So yeah, seems like we have seen a bottom building here out, and since then we are willing to rise higher. If we drop one time frame lower to the daily time frame, you can see price went from a downtrend into an uptrend again and into a triangle formation. We've seen a breakout of this triangle formation to the upper side and now pulling back down to retest the breakout level. And if we see now a push to the upper side above this smaller retest here, then I would get into a buy stop order again and hopefully ride this stock higher to his take profit area, slightly below resistance here of the last high of the last movement. Not the all-time high, that's it is the all-time high, so that's oftentimes again resistance. So I want to place my take profit below that. 2.1 risk reward ratio is great. My stop loss would be placed below the last low of this triangle movement. So I think for me again, a valid trading setup, purely technical. You can do with that whatever you want, make research by yourself. That was my analysis for these assets. And now if you're still in the video, you get my results of 1 year trading like this with my style. Here are the results of 1 year trading. Every trade, every chart covered in my video episodes, above 71 episodes, posted every week or nearly every week. And here are the results of my account balance. And at the same time, the performance of the S&P 500 index. You can see here in the end, 18.5%, my account balance 19.81%, the S&P 500 index. So if you only see that number or these two numbers, you would say trading is work. And with a direct investment into an S&P 500 index, I would have made slightly more money after 1 year. So I would say, yeah, that's correct. But you can see both have been rising in the beginning of the trading journey, the S&P 500 index as well as my account balance, but then the index crashed minus 20%, and in the end we have, even if we have profited nearly 15%, we declined 20% and was at the maximum minus 5% with the S&P 500 index investment. During that time, my account balance stayed nearly flat, a little bit up, a little bit down, nothing horrific, and the drawdown was minimum, really minimum in comparison to the S&P 500 index. Now the S&P 500 reversed pretty fast to the upper side, and now it's slightly higher than my account balance, but only slightly. That can change in a matter of a day. And yeah, I'm pretty happy with that results. I made the same profit in 1 year than the S&P 500 index, and it was a good profit. The S&P 500 index ain't making 19% every year, year after year. That's a high number for the S&P 500 index and not the average. I'm not sure if I can keep that number with my account balance every year, or if the average is also low. We will see. I can only test it with trading the next year and the next year after that, and still making videos, documenting my journey here. And you can probably learn from that or get inspired, whatever. If you like my content, if you enjoy it, tell your friends about it. And if you're seeing this as the first video ever from me, then yeah, please subscribe to the channel, let there a comment, that would be nice. Till next week, I will be posting, I guarantee. Bye bye.